Hi, everyone. It's Claudia with Digital Realty team of LPT Realty. I'm here today, super excited to give you guys a market update to let you guys know what's going on in the real estate world. And I'm also super excited because I have with me here our mortgage broker, Philip Ferguson with Nexa Mortgage. He has over 15 years experience here in Hampton Roads in the mortgage industry. And I'm so excited because he's the perfect person to talk with you guys and let you know what's going on here. So Phil, for the people that aren't familiar with you, if you could please give yourself an introduction.
Hey guys, this is Philip Ferguson, mortgage broker here with Nexa Mortgage. As Claudia stated, yes, I have been in the industry a while. I have seen interest rates much higher than where are now, so we're going to kind of walk you through that. We have access to over 200 lenders, make sure we can get you the best interest rates. So if you guys need a second opinion on rates, we can definitely help you there and partner you with Claudia and Tane to help you get the perfect house.
Awesome. So being that you've been in the industry for so long, right now, like something I'm hearing a lot is a lot of buyers are scared to buy because of interest rates and where they're at right now. Is that something that you've seen beforehand?
Yeah, and I'm actually going to show you this chart real quick, kind of give you an idea of where rates were and then where we're going now. Okay, so as you can see, this is back in 1981. Interest rates were 18.37%. So you're talking about now where rates are, again, you see on the chart, 30-year fixed rate mortgage, we're at 6.96, and a 15-year mortgage, we're around 6.347%. So again, this is not really high compared to what they were historically. And as you can see that they came down, but let's just go even back to 2000. Back in 2000, rates were at 8.64%. That was only, 23 years ago that, rates were higher than where they're at now. Our parents, our grandparents, they all made it through this. You guys will get through this as well.
Right, absolutely. Because I know, like, for example, I'll talk to people and they've been renting for a while, and they're paying like $2,000, $2,500 in rent right now. But they're so scared because the rates are, close to that 7% mark, that they're saying they're just going to keep on renting. And I think that right now it's really important for people to understand what they are missing out on when they do decide to keep on renting in hopes that the rates were going to fall, which they're going to fluctuate. But when you continue to throw that money away in hopes that the rate falling, I think it's really important people understand what they're missing out on, because that same money could be put towards something that is building you equity. And I think that part people are forgetting about, that equity ends up paying itself pretty much back from the money that you put into it.
Yeah, and that's great. And kind of one of the things that I ran some numbers before our meeting, and a client that wanted to buy a house for $2,000 a month, they could potentially afford a house up to $250,000 on an FHA loan with just 3.5% down payment. In that same time frame, just in 2 years, just by paying the mortgage down itself naturally, they'll have $4,000 in equity. And then if we take in consideration appreciation, it would go up another $5,100. So in 2 years, they would have built up $9,100 worth of equity. Or again, rent, that's money all gone. They don't see that. I mean, your landlord's thanking you, and then vice versa on a $315,000 house, that can get you a house for $2,500 with a 3.5% down payment. In 2 years, just by paying the mortgage down, you would have made $7,000 worth of equy, and then appreciation. And I'm just using 2%, kind of conservative for what the increase would be year after year. You would have 12,726 in appreciation, a total of 19,726 in equity just in 2 years. That's a pretty amazing. That's money you'll have access to later. We don't think value of houses are going to be going down anytime soon. So that's money you could borrow later, cash out, maybe pay off some debt. There's tons of options that you have to do with that money.
Right. And then I know like another kind of point going off of what you're saying too, with the interest rates, for lack of a better word, really taking the word interest and thinking about it as like money that you don't see pretty much once you pay into it. It goes to a bank or it goes to somebody else. When people are renting and it's, $2,000, $2,500, you don't see any of that. That is 100% interest, essentially. It
Correct.
goes to the landlord and they get to do with it as they will. They pay their mortgage and the rest is whatever. But the tenant that's actually the one that's bringing those funds does not see those funds. So essentially that's 100% interest, and it's interest that they don't even really have any kind of say so or control about either. As long as you're in that property, what the rent is what the rent is. So when you think about it like that and you compare it to home buying, when you have a 6%, 7% interest, it ends up being not as bad when you really think about it in those sorts of numbers too, because at the end of the day, like we know the rates change. You could always refinance and bring that, if the rate's going to come back down for you. If it comes down and you refinance, and great. Or you have that equity that's building up slowly in your property, and that's available to you to access at a later time if you need it. And those are just options that people don't have with renting. So I think that's very important for people to understand that yes, you can wait and you can try to see if the interest rates will go down. But in that time that you're waiting, you're still paying 2,000, 2,000, 2,000, 2,000, 2,000. If you had put that same 2,000 in that same amount of time and into a house, a property that you buy, and then maybe the rates do come down and you refinance, now you it's a win-win situation.
And that doesn't even include the tax benefits of being a homeowner. You get to write the taxes off that you pay on the house. You get to write off the interest that you're paying off the house as well. So those are all great points. Yes, you're throwing your money away, but I mean, again, you're a landlord. They're writing off the interest now for you. They're writing off the taxes that technically you're paying for them off on the house. So yeah, I mean, it definitely does not make sense. And then also, like we said, while you're waiting, the value of that same house you saw a year ago now went up in value as well. So now you're gonna have to buy that house more than you could have last year or the previous year.
Right.
Yeah.
And you also get into this like almost like a mob mentality, where if like you're thinking that, then probably a lot of other renters are also thinking the same thing. And what that does is it builds up this anticipation too. So where if everybody's like, oh, well, I'm just gonna wait for the rates to drop before I buy. The second that rate even dips a little bit, it could become a madhouse really quickly. And
Yep.
now, you're having 10 offers on one house and you're having to go up and up and up on the price to try to fight somebody out. When, if even though it's not the most ideal rate right now, if you buy a little bit sooner before it happens, you're not having to deal with that much of a chaotic situation during your home buying process. You already locked in, and really all you have to do at that point, if the rates were to drop, is refinance if you wanted to. And that's not as stressful as going to see 10 houses a day, submitting 15 offers, getting beat out. That's not nearly as stressful.
Yep.
When you have a good mortgage broker like Philip, then the refinance thing is like in their sleep pretty much. So
And half the cost. You got to think that the value of your house will increase, and the cost it will take to refinance your house is almost going to be half of what it would be you waiting for the value of the houses going up because you wait for the interest rate to be lower. But yeah, so I mean, and then Claudia, do you have any listings that we like a comparison we can show a client? Hey, this is what you could buy a house for $250,000, which is again the $2,000 a month payment versus what they can get renting for $2,000.
yeah, so right now let me share my screen. All right. So this is just an example. This is a single family house in Norfolk, and it's listed for 280. So it's like right in between that 250 to 300 range, where somebody in the $2,000 to $2,500 monthly payment range could fall between. And this property is listed for 280. It's 3 bedrooms, 3 bathrooms, and 1,500 square feet, just over. And what you'll see is that, for one, there is a higher number of rental listings on the market right now. So the housing inventory as far as home buying is a little bit low. And so we're seeing an influx of people putting their properties up for rent. Now, if you were to try to rent the same kind of property, but just not buying, just simply trying to rent it, 3 bedrooms, 3 bathrooms, you would be looking at now today like this. So same thing, about 3 bedrooms, 3 bathrooms. The rent price for this property is $2,275. So just under $2,300 a month. So similar to your monthly payment that you would be making on that house had you bought it. Now, the difference is if you choose to stay inside of this rental property for 2 years because you decide that you don't want to buy while the rates are at where they're at now, then after 2 years of rental payments, you have made $2,275 times 24 months, $54,600 in rental payments after 2 years.
Yeah, wow. That's and then crazy. Now the square footage on this is 1839. What was the square footage on the other house? I thought it was bigger.
This one's a little bigger. The last one was 1,500 square feet. So it's about 300 square feet bigger, which usually is about the size of like a little room, a small room. Maybe they have like a mud room or something on the rental. But yes, after 2 years, that person has thrown away into the trash $54,000 in rental income. That $54,000 could have been put towards a property that they bought. Yeah. And that's not even mentioning the equity that they gained from appreciation, that market appreciation.
Right on the dot. I can't agree with you more. Yeah, that's a lot of money to be throwing away. There are some instances where renting does make sense, but that's only if like you're renting for a year or less. Mm-hmm. If you're going to be buying or staying in an area for 3 to 4 years, it definitely makes sense to buy versus renting.
Right. And just looking at like the market statistics, so year over year statistics, we have this data that comes out every single month. But for the month of July, the median sales price increased 5.43% from last year, July. So last year, July, the median sales price was $322,000 for Hampton Roads. This year, the median sales price is $340,000. So that's almost a 5.5% increase as far as market appreciation. So again, using that same example of that property that we looked at, that was 280. If they had stayed in that property for 2 years, assuming that the market appreciation is similar to what it's been for the past like year or two, around this 5% market appreciation year over year, that's about a $15,000 increase in appreciation on that property. So at 280, when you originally bought it, you could be looking at about 295 for the value in 2 years of owning that property. And that's just something that doesn't come with sticking with that rental. It's 100% interest when you have that rental. So all that money basically goes into the wind. I think that's really important for renters to really consider and to think about when they are deciding to wait on the market.
Awesome. But yeah, and then examples we've given today were, you guys coming up with your own down payment to clear up some misconceptions. It's only a minimum of 3.5% down. I know a lot of people think you have to come up with 20% down. It's only 3.5%, but depending on your credit, we also have down payment assistance available for you guys as well. We can go over that into another session. Thanks, Claudia, for having me on the show. It was great talking with you as usual.
Thank you, Phil, for your expertise. And I appreciate you taking the time out of your day today to talk about this with me. If anybody has any questions, definitely feel free to reach out to me at Digital Realty Team and also Phil Ferguson at Nexa Mortgage. We would love to sit down and talk with you and give you a more in-depth look at what you have going on personally, because at the end of the day, there's pros and cons to every single market. And the best time to buy or sell really just depends on what you have personally going on in your life. So it's important to stay up to date with these market statistics, but definitely make sure that you always relate it back to yourself. And it's best to speak with a specialist like Phil so that they can relate it back to you personally.
All right. And you can reach me at 757-582-5974, or you can scan my QR code. Talk to you guys
Awesome.
later.
All right. Thanks.
You're
Bye.
welcome. Bye.